What's up, guys? John here. Job openings slide to 8.7 million in October, well below the estimate, the lowest level since March of 2021.
The number of job openings falling to 8.7 million.
Job openings and labor turnover, known as JOLTS, for October, 8,733,000. That is the weakest since March of 2021.
Now, Jerome Powell came out yesterday and he made a statement. He said Fed will not cut rates until the labor market cracks.
The rate cut will not come until the second half of 2024.
Soft landing is unlikely. I don't think the Fed is ready to declare victory on inflation yet.
Now, I don't know what you're seeing, but what I'm seeing is a much more challenging economy. Everything is much more expensive. The labor market is not what it seems. Many people are holding 2 jobs, 3 jobs, maybe even more. It's a different type of world. It's a different type of normal. And so when you're looking at all these things together, what you're going to start to see here is the future of the U.S. economy, the future of business, and the future of enterprise in America. And I believe this is going to change everything that we know about U.S. capitalism. And I'm going to break it down for you and show you exactly what's about to happen to small business owners. If you're a business owner, if you're an employee, if you're an entrepreneur, you're just an American, pay attention to how the future is getting reshaped and molded before our very eyes. I'm going to break it down for you with the facts. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about what's happening in America. And if you'd like to fix your credit to position yourself for the greatest wealth transfer in American history, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. If you're thinking about getting a business loan or buying a business, or you have any type of big ambition for 2024 and 2025, you want to put yourself in the position to where if you were a bank, you would want to lend you money. You want the best credit possible. Go to GreatCreditFast.com. Take a look at this. So Spotify now laying off 17% of their entire headcount. You have layoffs skyrocketing. Wells Fargo CEO warns of severance costs of nearly $1 billion in the fourth quarter. Layoffs loom, right? You're starting to see layoffs happening 1 day ago, 1 hour ago, 32 minutes ago, 3 hours ago, right? You're starting to see this more and more and more. But look at this. 10-year Treasury yield tumbles as decline in job openings signals cooling labor market. So you have JOLT job report figures for October came in with these 8.7 million. This is nothing compared to what's about to happen when you look at the 2 trillion in corporate debt, meaning this is loan. These are loans that corporations will have to refinance at a much higher interest rate. They borrowed money in 2020 and 2021 and 2022, and now they have to refinance and get a new loan to pay back the old loan. It's not like a fixed 30-year fixed rate mortgage like like you would get on a home. No, this is short-term loans. And so a lot of these corporations are in very, very big trouble, meaning a lot more layoffs are going to be coming. And so when you look at all these situations unfolding, consumers walking towards a cliff, consumers have less money to support these businesses, what you're going to start to see here is a big opportunity, a huge opportunity. And here's how this is going to work. Business owners in America, most of them, are going to have one of 3 options over the next couple of years. We have 4 options. 1, they have the money, they're successful, they stay in business, right? 2 is they file bankruptcy. If they file bankruptcy, bankruptcy is rising, but safeguards exist. This just came out yesterday. When you start to see the climb in bankruptcies, WeWork, and all these large corporations as well going under, this is becoming more normal. And then 3 is they are going to sell. They're going to sell their business, or they're going to try to sell it, right? And then, 4, maybe they'll do some type of partnership. They'll bring in an investor. They'll try to figure something else out, right? But a lot of people are going to have to make some tough decisions. And when you look at the numbers of how the U.S. economy is actually structured, you'll see that older entrepreneurs own half of U.S. small businesses. These are people 55 and up, right? 55 and up. So when you start to look at this, what are you going to start to see here? You're looking at these employees or these entrepreneurs with employees with today's labor costs, sky high. These 20 states right now, they've already increased minimum wage 2023. So you're dealing with an environment with sky high labor costs, sky high insurance, everything is expensive. And then you have consumers that have less money to spend, right? So what is that? It's a recipe for a lot of problems for small business owners. And when you look at the fact that 46% of the US population works for small business, it's a big problem, right? But I believe it's going to be a big opportunity for some people. Now, here's what I mean by this. I think venture capitalists, I think private equity firms, they're going to start doing things like roll-ups. They're going to buy, let's just use an example of a auto mechanic, right? They might go buy one auto mechanic and then maybe they go buy 2, 3, 4 in the neighborhood. They roll them all up together. They increase costs. They increase pricing. That's what a lot of companies will start to do. They'll start to do all these roll-ups. You'll start to see some people, they'll have a specific business, a laundromat, and they'll try to buy out a partner, or they'll try to buy out a neighbor, right? And then that person that owns a laundromat, well, then maybe they do some type of partnership or a joint venture together, or maybe they just do a complete buyout as a whole. You're going to start seeing a lot more businesses consolidate, which is not that great for the U.S. consumer. The U.S. consumer, if there's a lot more consolidation, prices are likely going to continue to rise. So when you start to look at this, you have to ask yourself, what's going to happen next? Well, if we start to see a lot of these businesses start to get listed for sale, you can see some very, very clear things happening. And this is why I think you're seeing a lot of entrepreneurs on YouTube, TikTok, Instagram, all talking about buying small businesses. The reason for this is when you look at the numbers, it's shocking. Almost none of these businesses sell. They just basically go bankrupt. They go BK. They shut the door down, or they close the lights and they shut the door, lock it up, and give the keys back. Why? It's because not many people want to go out there and buy a business that's doing 50, 60 grand a month in gross income when their expenses are 40 grand, right, or 50 grand or higher, right? So when you look at this, about 80% of businesses in the United States with employees have revenue of 1 million or less. We classify these as Main Street businesses. This is a big market, and generally where business brokers start the professional career, but only 1 out of every 5 of these businesses in Main Street market, and a little less than 20% actually sell, right? So 20% actually will sell in a normal market. Think about in this economy, how many people are going to want to do that? Probably not that many, right? So what I think is going to happen is you're going to see businesses doing maybe 800 grand a year, 500 grand a year in gross income that, they can't find a buyer for 500,000. They can't find a buyer for, that would buy them out for 1 year's earnings. They can't find a buyer. So maybe they'll say, you know what? I'll sell it for 200 grand. I'll sell it for 150 grand. I want to get something, right? You're going to start seeing a lot of this over the next year or so. And with this, I believe what people are going to start doing is they're going to say, hey, look, I can take this business making $500,000 a year, and what I can do is I can automate. I can bring in automation. I can bring in technology. I can outsource. I can do all of these things to cut costs to give a better experience to the consumer, and this business actually run a lot better. That's what I think is going to happen. Just like what's happening right here in China. Like if they can get this to a position to where they can pump gas, they can flip burgers, they can clean the floor, they can clean bathrooms, they can streamline a lot of this. Imagine what they'll be able to do in a year, 2 years, 3 years. The technology and automation is only going to continue to grow. And it's going to get, I think, next level really, really fast. You look at, Amazon right now, I did a video right here, obviously, 750,000 robots they already purchased. Like 750,000 robots. They have 1.1 million employees, for context. 1.1 million employees, 750,000 robots. Like, it's crazy how fast this is growing. China plans to mass produce humanoid robots by 2025. And what industries are they going to be going in for? You won't believe it. You're talking about manufacturing, agriculture, architecture, logistics, energy, healthcare, education, elderly services. They're going basically after everything, right? And they're talking about mass production 2025, call it a year and a half, right? This is all happening. It's happening so fast. So when you see them talking about, layoffs are happening, this has only just begun. I'm not saying this to scare anyone, but facts are facts. This has only just begun. Small businesses can't hold the weight of what's been done to them over the last couple of years. They're going to be forced to either adapt, to sell, to bring in a partner. They're going to be forced to make decisions, tough decisions over the next couple of years. I personally believe that if you have real big ambitions, I think that if you have a small business that has a lot of potential, you might be able to buy out 1 or 2 or 3 or 4 of your competitors over the next year or so and kind of build out a mode of safety around yourself and your family through that business and really pick up a lot of wealth for yourself. You definitely do not want to be a small business with 1 to 5 employees over the next couple of years, because competition is going to get so fierce. Things are going to change so quickly. You want to get as big as you can and build as much cash as you possibly can over the next couple of years. What do you think about this situation? Do you think we're walking into a situation and a scenario where in the next couple of years you're going to begin to see more and more technology, more consolidation of wealth like we've seen? Look at what corporate real estate investors have done to the real estate market. They purchased 30% of all single-family homes in at the height of the market, and they say by 2030, in about 6 years, they're going to own 40% of all single-family homes in America. 40%. This isn't, this is what CNBC is saying. This is what, MetLife Insurance, this is what they're saying. It's a consolidation of property, consolidation of money, consolidation of business, consolidation of everything. And it's happening so quickly. We're in that great wealth transfer right now. I'm not saying this to scare anyone. I'm saying this to motivate. There's a lot of potential. There's a lot of opportunity for those that right now are educating themselves. They're putting themselves in a really, really good position. You might be in a situation right now where you're working for a small business and you're looking at that owner saying, you know what? Great guy, great girl, like a great person. I would love to continue working here, but I need to make more money. They want to retire and they don't want to work there forever. You might say, hey, look, what if we do something where I'll start to pick up some more work? You give me a little bit more responsibility. Let me prove to you what I can do for you to let you, enjoy your retirement a little bit more. Maybe I can also, find ways in which we can reduce costs together. We can work together as a team, and we can find out a solution here to where your retirement's taken care of, and I have more opportunity here to where I can flourish and, succeed in this expensive inflationary world. There's going to be a lot of creativity, a lot of opportunities, a lot of options for people that are, taking the initiative over the next couple of years. Definitely not that many options for those that are kind of pulling back, hoping we go back to 2018, 2019. What do you think about this? Drop below, we'll have a conversation about it. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. You definitely want to have exceptional credit. You want to be out of high interest rate consumer credit card debt. You want to put yourself in the strongest position possible entering 2024. Go to GreatCreditFast.com, click the link in the description below this video. If you have negative items on your credit report, we'd love to help. See you in the next video.